We are talking the future of cars and what this means for the Platinum Group metals. With me now is Jeffrey Christian, Managing Director, Partner of CPM Group. Welcome back to the show, Jeff.
It's good to be here, Danielle.
Yes, well, one of the messages I've been hearing, or I guess one of the concerns, is that is bad news in store for the Platinum Group metals down the road with electrical cars, you know, that will soon become our new norm here?
I think CPM Group's message at this conference we're at about mobility and precious metals is that in a long-term perspective, precious metals, platinum and palladium and rhodium have real risks of finding that the future of automotive technology obviates the need for PGMs. But that's something that's going to be, 30, 40, 50 years from now probably. And that I think one of the themes that we have is that the enthusiasm about electric vehicles and the expectations that you see, especially in the lithium and cobalt industry, are A, misplaced, and B, way too enthusiastic. These are technologies that are going to take a long time to be introduced, if in fact they succeed in being introduced. And so, by 2030, you might have almost as much as 10% of the auto industry in electric and hybrid vehicles. That means that more than 90% of the vehicles will still be burning either gasoline or diesel and will still be using catalysts. And it's going to be a long time before you see a significant decline in the PGM requirements for auto catalysts.
So you don't feel that those working in the recycling industry need to worry so much right now?
The recycling is going to take there's going to be a big pool of vehicles out there for many decades that have PGMs in catalysts that can be recycled.
You've said at different times in history, different motives of power were in focus. What's the focus today?
Well, the focus today is petroleum-based things, and there's a lot of push toward finding the next, more environmentally acceptable thing. Right now, people think that electric vehicles are the technology of choice for the future. But again, that future is going to take 3, 4, 5 decades to really come into fore. And our view at CPM Group, we've been doing a lot of work with what they call liquid organic hydrogen carriers. We have a client that has developed this technology. That would take us to hydrogen engines, and that could come along faster because you can use the same distribution system that you use for gasoline.
I'm glad you brought that up, because what would that mean for the metals?
That would be very devastating for the PGMs, because if you went to hydrogen engines, you don't need any platinum or palladium or rhodium. You don't have any catalytic converters, and you don't have fuel cells. So you would be burning hydrogen. You'd be oxidizing hydrogen, and your output, your exhaust would be water vapor. So you wouldn't need the PGMs. And because the LOHC could speed the transition, you could see a faster transition from ICE engines that burn gasoline and diesel to ICE engines that burn hydrogen.
There's such a focus and shift towards cobalt these days. Do you feel that this interest is justified?
No, the cobalt market is completely overblown right now. You have a short-term shortage because you're using it, but if you look at the various, there's a wide array of lithium batteries that are available, some of which use cobalt, and the preferred ones use cobalt now. But some of if you go back 2 or 3 years ago, maybe you were using lithium-ion batteries that had 60% nickel sulfate, 20% manganese sulfate, and 20% cobalt sulfate. Now probably the preferred mix is 811. So you've already cut the cobalt use per battery in half, and you have the capacity to engineer the cobalt out completely. So one of the cautionary tales that we've been telling our institutional investors is don't go investing in cobalt production, because this may be a false start.
Interesting, because the investor wants to really chase the next hot thing. Is there any metal right now that you think could really have a big potential?
Well, manganese is a very interesting thing, and we just completed a long-term study on manganese and focusing on manganese sulfate use in batteries.
Wow, but how does one invest in that? So you find a miner?
You find a mining company that's going to invest, that you can invest in. And like I said, as with cobalt, we've been telling people to be very cautious about lithium, because I don't think that the lithium market will support a lot of new lithium mines. Manganese is an interesting metal. We want to do some more look at vanadium, but we haven't had a chance to go through that iterative yet. And we're also looking at uranium because if you go to electric vehicles, you're going to need a lot more electricity than is currently capable of being produced in most countries. Germany is probably the major exception to that rule. Most countries don't have the electricity generating capacity to really support a major shift to electric vehicles. So that is going to require nuclear power, and that is going to require 10, 20, 30 years of permitting and building those nuclear power plants. So on a long-term perspective, uranium looks interesting, but on a short-term perspective, it's not particularly interesting.
Jeff, Christian, thank you so much for your thoughts.
Always a pleasure.